moving on to vol. Realized vol in Bitcoin is stayed in the mid-30s. It has popped a little bit on Ethereum as we did break down a little bit worse in spot. So popped up to around 50, settled in the high 40s there. So we are seeing a bit of a divergence in realized between the two assets. Implied vols were flat to slightly softer. It's more soft in Bitcoin and more flat in Ethereum, particularly sort of 1 month and out. The absolute front end, the weeklies did get a bit of an offer come back to them on Ethereum, though, of about 5 to 7 vols. Now, we're light on data this week. We obviously got the Juneteenth holiday. If these ranges do hold, which they kind of smell like they are holding, then short gamma probably continues to work. The 2nd of July is the date now that people are thinking this thing launches on the ETFs, but it's not supporting prices. Traders are expecting less inflows due to a lack of staking yield in the ETFs. But that is debatable whether that is the reason why you won't get big inflows, because if people could stake in the first place, they would have already bought Ethereum and staked it. So that the inflows for Ethereum ETFs should really be coming from a universe of investors who can't just buy Ethereum and stake it. So they're not going to care that much about a staking yield of whatever it is, 5% that they're missing out on, when they're getting into Ethereum because they think Ethereum could double, basically, right? So I don't know that that's a sensible argument that you're going to get less inflows because of no staking yield. But I did see that argument out there. So I thought I'd mention it. We obviously have had mixed messages on the macro as we see disinflationary data, but a higher for longer type message out the FOMC, and therefore the optimism on that initial knee jerk got scaled back. And Powell hinted that the labor market, i.e. the non-farm payrolls data, may be overstated. So that saying something like that makes you think he is itching to cut rates. He just needs a little bit more evidence. So on that front, you would think buying the dip on crypto makes sense because the Fed do want to cut rates. They just don't feel like they can quite yet, right? Okay, here's the term structure moves. About a 2 to 3 vol point parallel sell-off in most of the Bitcoin curve. That back end doing a little bit better. Cool skew getting faded out to August maturity. So August, couple of vols for calls, but if you look at the front end weeklies, you actually got a little bit of a put premium now. Long day calls are still holding a 3 to 5 vol bid in Bitcoin if we go to September and out. Ethereum term structure steepening a bit, those weeklies getting hit hard, but then the rest of the curve holding up much better and the long end actually higher. So March 25 was up by about a volt and a half. Ethereum call skewers are holding up better than Bitcoin. So you see even July's got a 4 volt premium in calls. Makes sense if we are going to get the ETF by July that there should be a call premium there. So that kind of justifies it. Over here on the relative value side, slightly higher from 1 month and longer. The curve shifting parallel up by 1 or 2 vols. But the weekly is softening a bit, but still looking at like 10 vols. But the highest point of the curve looks like 1 month at about 12 vols for Ethereum over. That significant premium makes sense because the ETF is probably going to act as some sort of catalyst for a move. After that is launched and give it a week or two, you may see a bit of a reset in that Ethereum vol where it comes back in towards that kind of 5 level again, but remains to be seen. Ethereum Bitcoin spot spread drifting into that support zone again where it was not long ago. Alts in general are coming under pressure. Solana got absolutely whacked recently. So, you know, a break lower in this whole space and certainly in this Ethereum Bitcoin cross rate, that could set up nicely for those call switches going into the early July date, if that's going to be a bullish catalyst. So watch out for that. If over the next sort of week, we get extra weakness out of Ethereum and it really cracks that level at 33, then have a look at these call switches out in the long end. They might actually be setting up really nicely. So that's one thing I'll have on my radar to see if it's worth pulling the trigger on any of those. Skew-wise has been drifting lower for calls in both assets as spot prices can't really get going. And people had already put their bullish trades on. So if anything, they just need to unwind some stuff to reduce risk. The call skew in Bitcoin faded more than Ethereum, as mentioned. That weekly skew saw hedging demand in Ethereum as well. So weekly Ethereum puts more in demand, but really if we go out to July and onwards, it's all about the calls. Overall, no real change in setup. And the message from the options market is near-term caution, but a rally is coming at some point later this year. It's just a matter of when and not if, basically. All right. The picture may change if 3,300 gets taken out to the downside. But for now, we are believers in the rally. Okay.
Hi, everyone. Thanks for making it to the end of the video. Remember, this is just a little taster of what we do at Options Insight. To get access to all our research, including my in-depth vol market insights, flows and positioning report, and my portfolio trades, and a whole lot more, you can sign up for a free 1-month trial at options-insight.com. I'll see you soon.